Turn your speakers up. 5, 4, 3, 2, 1. Our nation is facing an unprecedented challenge this year. That's why, for the first time ever, two of the smartest financial minds in the world will share the airwaves to discuss what happens next. For several years, they've been publicly warning everyday Americans about the instability of our financial system and how the next crisis could be worse than anything we've ever seen in America. And now these two men who predicted the Great Recession in 2008 are issuing a new, urgent prediction. According to them, what's happening in 2020 will change America forever, and millions of unprepared citizens will be wiped out. It's what they call the Great American Reset of 2020. After serving several years in the United States Marine Corps, our first guest quickly rose to prominence when he wrote the #1 personal finance book of all time, Rich Dad, Poor Dad. Robert Kiyosaki's ideas have been called revolutionary on Forbes because they changed how millions of Americans think about money. Our second guest is best-selling author Jim Rickards, a man who's advised the CIA and the Pentagon in matters of national security. He's given advice to members of President Trump's cabinet. He's been inside the West Wing of the White House, the U.S. Treasury, and the boardroom at the Federal Reserve. He even helped the Federal Reserve save America from a $1.3 trillion economic crisis in the late 1990s. For the first time ever, they're both issuing a warning to everyday Americans to help them prepare for this great American reset. Because as billionaire Mark Cuban said, the economy will never be the same. Albert Edwards, a strategist at the bank Societe Generale, called this reset a seismic transformation. The World Bank has already warned that millions will be left in poverty. You don't have to be one of them. So stay tuned, because they're about to reveal the exact 5 steps you should take right now to protect your wealth and your family. Welcome to the Great American Reset of 2020.
Hello, everybody. I'm Peter Coyne, and I'll be your host for today's event. Joining me today are two of the most well-respected financial minds in the world. Millions of people follow their work because they have a history of making shockingly accurate predictions and forecasts. And today, for the first time ever, they're both talking about an urgent forecast about what's about to happen in America. 2020 will go down as a crucial year in our nation's history. We've already had the pandemic, the unprecedented economic shutdown, and a stock market crash. The price of oil has collapsed to its lowest price in history. According to the Daily Wire, the price of oil has dropped below the price of a single roll of toilet paper. Our economy is in absolute freefall. Manufacturing activity has dropped to its lowest level ever. The same thing with retail sales. It's worse than what anyone saw in 2008. And it's no wonder why many experts are already predicting a wave of bankruptcies like we've never seen before. Things just keep getting crazier and crazier. But as bad as things already are, according to Jim Rickards and Robert Kiyosaki, this is just the beginning of something much bigger, something that, according to them, could reset America. Millions of people will be left behind in what's about to happen. And they're not alone in forecasting that America will never be the same. Famous hedge fund manager Bill Ackman said, and I quote, "America will end as we know it." Albert Edwards, a strategist at French bank Societe Generale, called this reset a seismic transformation and said, and I quote, "There will be no turning back." And Atif Mayan, an economics professor at Princeton University, said, "We should be very worried. We are definitely at a tipping point." So that is why I'm hosting this urgent event, to speak to both Robert and Jim and to help you prepare. So if you've been wondering, what should I do now? How fast is the economy going to recover? How long will this shutdown last? We're about to get some answers. Because these men do not work for Wall Street or any mainstream media outlet, they are 100% independent. And that means they're not going to take any money to fulfill a particular agenda here today. And because of that, they're not beholden to anyone. The only agenda here today is for these two men to share their unbiased ideas with you and to help educate and prepare you for this great American reset. So there's no time to waste. I'd like to get started. So Jim, let me start by thanking you for being here. Back in January, way before the market started to panic, you sent this note called Contagion. I'm putting it up on my screen here for viewers. You sent it to a small group of readers, warning them that this pandemic could get much worse. You said that this crisis that started in China could cause a global financial crisis and eventually put a lockdown on the banking system. So fast forward several months later, and our whole country has been on lockdown, and that's changed America as we know it. Shopping malls look like ghost towns. Factory closings are at an all-time high since World War II, and shops, gyms, bars, colleges, schools, restaurants, all of them have been on lockdown for weeks, and no one knows what to expect when this lockdown ends. But recently, President Donald Trump announced a three-phase plan for opening up America again in an attempt to salvage the economy, and some people are talking about a so-called V-shape recovery when our economy quickly bounces back after the country reopens. So, Jim, do you think that kind of V-shaped recovery is possible? Will people just come out of hiding and go back to normal, packing bars, airplanes, shopping malls, elevators, offices, etc., like we used to do before the pandemic?
Yeah, I don't think that's going to happen, Peter. Now, if you say is it possible, I guess in a period of high uncertainty, anything is possible. Maybe for viewers, we should explain what a V-shaped recovery is. It goes down very sharply, but then it comes back very quickly. So if you look at a graph of output or employment or any other metric, it looks like a V. It goes down and comes back. Well, we went down. Now, we know that for sure. A lot of the data is in. A lot more is coming, by the way. We just got first quarter GDP, and it was bad. But second quarter will be worse. The issue is just because it went down fast does not mean it comes back fast. There's a lot of happy talk coming out of the White House. Larry Kudlow was a big cheerleader. By the way, nice guy, but one of the worst forecasting records of anyone I can identify. You hear about what's called pent-up demand. The idea is, I didn't spend this money in April or maybe in May, but I will spend it in June. And so it's just a timing difference. That's nonsense. There is no pent-up demand, maybe a little bit, but when people don't go out to dinner because they're worried about the virus, and then restaurants reopen and they go out to dinner, they don't order 2 dinners. They don't order 5 dinners. They order 1 dinner. So all the dinners they did not get in February, March, and April, that's permanently lost. That does not bounce back. Beyond that, say, okay, the gym and the dry cleaner and the pizza parlor and the restaurant and the bars reopen. Well, some of them will reopen, some of them won't. Some of them have closed their doors permanently. They don't have the working capital to get through something like this. We're not going to have a V-shaped recovery. We're going to have what's called an L, where it goes down and then chugs along at the bottom.
I saw a Gallup survey that showed 71% of people said that they would wait and see what happens after the spread of the virus is declared flattened, the curve flattened, or whatever the language is. So 71% of people will wait and see what happens after they get the all clear to go out. So it sounds like nothing will be the same afterwards.
That's right. I mean, just because a restaurant reopens, which is a good thing, it doesn't mean that the customers all flock in. They might still be concerned, and maybe the restaurant has half as many tables because they've got to maintain social distancing. So people really need to think through what it means. Things will reopen, but it won't be the same.
So you recently went on record saying that we're about to see a series of dominoes falling. First, massive unemployment, followed by a wave of bankruptcies. Then the crisis will spread to other important areas of the economy, like the real estate market. And then banks and financial institutions will get into trouble because people won't be able to pay loans. And finally, you said that the last domino to fall will be a complete collapse of our society and our rule of law, with massive social unrests in some parts of the country, and that this shutdown could last, 18 months, if not longer, when we were last talking. So looks like Neil Kashkari, the head of the Federal Reserve Bank in Minneapolis, agrees with you. He recently said, and I quote, "This could be a long, hard road that we have ahead of us until we get to either an effective therapy or a vaccine. It's hard for me to see a V-shaped recovery under that scenario." So that sounds like exactly what you were just describing. It's really scary stuff if it's true. And so I want to turn to Robert now. Robert, you just heard Jim. Do you agree with Jim that we're facing a depression right now?
I agree with Jim on almost everything. I started following Jim with his book, Currency Wars, which I understand, and then New Case for Gold, and then The Road to Ruin just verified. The thing that's sad is if they had read Jim's books, maybe fewer people would be in the toilet right now. Mm-hmm. And so that's why I agree with him. And one more thing is that, a lot of people think the Depression was like 3 years, 1929. But it actually didn't recover for 25 years. Stock market crash in 1929, and I think it was 1954, it finally hit 381 again. So that was a long time down. And I know people are hopefully thinking that, well, this will just bounce back and happy days will be here again and we'll be drinking and yucking it up. But I think things have changed, I think, permanently. And that's why it's going to take a while, I think, for people to adjust.
Mm-hmm. So let's pivot to unemployment, because employment is the foray into, human morale so often, and so many people are getting laid off right now, and that's affecting how they view opportunity and what the rules of the game are. According to Moody's, nearly 80 million jobs in the economy are at risk. 80 million. That's more than half of the 153 million jobs that are in the U.S. today. Even Fed member James Bullard, this is the second time I'm quoting a Fed member talking to you guys. It's a strange world we're living in if we're quoting the Fed as proof of the things you guys are talking about. But James Bullard predicting a possible 30% unemployment rate. Just to give you an example, a reference point of how unprecedented that is, U.S. unemployment peaked at 24.9% during the Great Depression. So some experts think that everyone who's getting fired right now will be rehired immediately. We've kind of alluded to this now with Jim, you talking about the V-shaped recovery and its unlikelihood, and Robert, you talking about the rules of the game changing. But you were just mentioning it, Robert. You're an entrepreneur. You run your own company. So what do you think is going to happen once the economy reopens? Are people who think they're going to get rehired being wishful thinkers?
I think that's the exact word. They're wishful thinkers. And that's why all of Jim's book and, my book on prophecy and I wrote this book this year, came out, Who Stole My Pension? It's a social contract of people that's been broken. If you went, like you said, you went to college, you worked hard, you got a good education, you're raising your kids, you have your money in a 401k, or you have a state pension plan, you're a firefighter or a school teacher. All of that might be coming to an end. But if you look at how pervasive this whole house of cards or a castle on sand here, it's going to get worse. And so to sit there and hope that it's going to get better, I think, is a little Pollyanna, or what would you call that? And I'd rather be preparing for it, because I'm, thank God we did well. We're going to do even better. Even in real estate, we're going to do better. But we planned for it.
Mm-hmm. You brought up a very interesting point earlier, and public health officials seem to at least back up the chance of it happening, and then you talked about the knockoff effect, but this is the impact of rushing back to open the economy, which there's a strong case for, but the risk that would pose to a second wave of coronavirus. And then you were talking about the fear that might cause, and I think that's a really good point. The head of the U.S. CDC, the Center for Disease Control and Prevention, warned recently that a second wave could be deadlier than the current pandemic. I don't know if he was talking about it in the sense you are, but I think what you brought up was a very important point, because a second wave could delay our economy maybe ever going back to normal.
That's it.
This is a huge crisis, obviously, so the government's taken unprecedented measures to stimulate the economy. So I want to ask you about that in just a moment. You've talked a lot about it in the past, but now, every time the government stimulates the economy, I think it can't do any more, and then it astounds me by doing something even bigger and crazier. I'll ask you about that in just a moment, but because I know that you both believe that this will trigger a reset in America, which I think you have some agreement on the definition of that, but it will wipe out millions of citizens. I want to hear all 5 steps that, Jim, you've been talking about people taking right now to protect themselves. I know, Jim, you've also invested millions of your own money in some of those solutions, and I believe Robert has as well. Robert, you've invested a large amount of your wealth in gold and real estate, so we'll get to some of that. But before we do, I want to say something important to the folks watching at home. I know, if you've never heard some of these ideas that Robert and Jim are talking about, you might think that they or all of this sounds crazy. You might think that things can't be this bad, that things always get better. But I want to remind you that both Robert and Jim predicted the 2008 crash, and those who ignored them, and there were a lot of people that ignored them, they paid a hefty price. These things are always a surprise. They're always things that can't happen, in quotes, right? And yet they do. So, Robert, we actually have a clip of you predicting live on TV that Lehman Brothers would go bankrupt. I'm going to play that right now for the folks watching at home.
We need to be participants in this system into our 70s and into our 80s, and then we need a plan for withdrawing those assets, just like we needed a plan for putting those assets in.
Yes, and you're putting those assets into those investment bankers that are in financial trouble today. And all I'm saying is, aren't these guys supposed to be the smartest guys on earth? And shouldn't we be careful who we take financial advice from, including the four of us on this panel?
Yeah, absolutely. Absolutely.
And that's what I'm saying. There's a lot of bad advice.
But Robert, you're really that worried about Goldman Sachs and Lehman Brothers?
Yes. I'm afraid the Federal Reserve will eventually or come close to bailing them out. That's what I'm concerned about. And that young lady who says the taxpayers are not in trouble, who's going to pay for that bailout again as the taxpayer?
Lehman Brothers says it plans to file for Chapter 11 bankruptcy protection.
The collapse of Lehman Brothers.
Lehman Brothers collapsed.
Hundreds of bailed out banks are still struggling to repay taxpayers.
It's funny how you shocked the reporters, but now we all know you were dead on, right? Hindsight's 2020, and you were spot on. And just a few moments after that interview, I think Lehman went belly up. Markets fell into a panic. Accounts were wiped out. Nobody believed you at the time, Robert, right?
Right, and I was about 8 months ahead of schedule. And that was the hard part because it was still looking pretty good. And I just say this again. I said, in 1996, your house is not an asset. I was trolled. That's what happens. You get attacked. I got attacked by so many people. I remember I went to a restaurant in Phoenix, and I went on air and I said, your house is not an asset. Man, I walked into the restaurant and I got attacked. You don't know what you're talking about and all this. And then 2008, 4.5 million Americans lost their homes. They haven't got them back. Just like when I was calling Lehman Brothers was going to go down, I was calling it in January 2008. I think it went down in September 2008. But people had a chance to get out, but they didn't. Because they said like a little covey of quail as the big bad wolf is coming around them. And I think really that's my purpose for being on this call with Jim, is that we were warning people for all these years.
Jim, something similar happened to you, right? I want to put something on the screen for you too, because in the summer of 2008, you wrote this letter to top advisors in one of the presidential campaigns. It said, "We can expect another panic spike in October of 2008. This financial crisis is not over." Okay, so then just 3 weeks later, all hell broke loose. Lehman Brothers went bankrupt and markets crashed around the world, ruining the retirement of millions, right? An estimated $2.4 trillion disappeared almost overnight from Americans' 401ks and IRAs when the market crashed in 2008. And once Congress realized you were right, they invited you to testify to the Senate, one of the committees, about the state of the economy. Most people who ignored both of your warnings are still dealing with the consequences to this date. So I want to put up this headline. I think it's pretty relevant. It reads, "A decade after the Great Recession, 1 in 3 Americans still haven't recovered." Okay, that was what I was just saying. Here's another one. "A decade since 2008 financial crisis, most Americans haven't recovered." Again, and this is from 2018. Seniors are still struggling to recover after the financial crisis. So here we are today, and you're both issuing another warning to America, and this time you're saying it could be worse than 2008. So, Robert, let me get your reaction to a chart that I'm going to put on the screen. You can't see it, but it's the chart of the stock market, and you can clearly see the crashes in 2000 and 2008. But it looks like we have a lot more downside now if there's another big crash beyond what we've already had. And you've wrote about this in your book. We held it up before, Prophecy, right? You predicted, and I quote, "the biggest crash in history." And you also said that millions of retirees would be left helpless and broke in their old age when this crash happens. So, Robert, it's 2020. Is this the year of the big crash you predicted? Has it already happened? Does it have a lot more to go? I'm just thinking if this is the big one, a lot of people are going to be wiped out more so than they maybe already have, and they need to hear this now from you if that's the case.
I started in 1999 writing that book and published in 2002. And I said the biggest stock market crash in history would come in 2016. And that was when China and the WT and all this other stuff was happening. But I never foresaw quantitative easing and ZERP. So that's why the crash didn't come until March 2020, where it dropped 3 consecutive times. And we entered a bear market in less than 3 weeks, which is very fast. To me, this is more than a crash or depression.
I want to play devil's advocate really quickly because people don't listen, I think, in large part because they're focusing on the wrong thing, right? They wouldn't have looked at something like prophecy, Robert, and saw all of the fundamental points you were making about thinking differently about the market or challenging what you've been told. They'd focus on the specific date 2016, and they say, oh, see, this is worthless because of the date, when they totally missed the bigger picture, right? So you mentioned it before, and I have a feeling that by playing devil's advocate, we can kind of maybe break through to some people that are hung up on specific details instead of seeing that big picture. So you were talking before about how in the last crisis, there was something new under the sun in the QE programs and ZERP, and that delayed things as you were writing about them at the time. So what about all of the stimulus that the government's putting forward right now? I was mentioning that, I cease to be amazed every time they roll out one of these programs that is bigger and bigger and bigger, right? So Congress just approved, I think it was $2.3 trillion in economic stimulus. So the largest emergency aid package in U.S. history. It even included famously sending money directly to people. So, Jim, I'll start with you, and then maybe Robert, you can weigh in. Do you think this stimulus from the government today can help boost the economy?
Well, the first problem in the analysis, Peter, is there is no stimulus. And when I say there's no stimulus, people go, wait a second, I've been reading about this $2.2 trillion program, by the way, which is now up to $3.2 trillion, on its way to $4.5 trillion, but that's a separate issue. But it's going on, but there's no stimulus. There is money printing and there is spending for sure. Deficits are ballooning. The Fed balance sheet is ballooning, but none of it is stimulus. And let me explain why. So over at the Federal Reserve, in the past 10 years, as Robert mentioned, I've written this series of books, and one of the points I made was that in 1998, Wall Street bailed out a hedge fund, long-term capital management. I actually negotiated that bailout, but Wall Street bailed out a hedge fund to save the world from collapsing. In 2008, the central banks bailed out Wall Street to save the world from collapsing. Well, here we are in 2020, and the question I had raised for a long time was, who's going to bail out the Federal Reserve? Each bailout got bigger than the one before, went up a level from the one before. Were we now at the top level when you had to ask yourself, who's going to bail out the Federal Reserve? Well, we actually have a partial answer. The $2.2 billion, sorry, I said billion, trillion, my mistake. The $2.2 trillion rescue package that the Congress voted on about a month ago at this stage, inside was $425 billion that was given to the Federal Reserve. There was some accounting gimmickry. They put it in a special purpose vehicle, but that money was given to the Federal Reserve. It's already higher than it was in the response to the 2008 crisis. But on top of that, we're now going to stick another 4.25 trillion, make it 5 trillion for a round number. So the Fed's taken their balance sheet to $10 trillion, and bearing in mind that in the last crisis, it never got over 4.5 trillion. Now we're talking about 10 trillion of money printing. And what's the Fed doing with the money? They're buying corporate debt. They're buying municipal bonds. They're buying commercial paper. They're propping up the primary dealers, propping up the banks, propping up mortgages, propping up everything in sight. So is this stimulus? Well, it is money printing. I just described that, $5 trillion of new money printing or more. And they are keeping the lights on. But where's the stimulus? That's not stimulus. That's just giving people their money back. To decide that there's going to be stimulus, you have to ask yourself, well, what are people doing with the money? And this was where you get the concept of velocity. It sounds a little technical, but velocity is just the turnover of money. So, I go out to dinner and I tip the waiter, and the waiter takes the tip and takes a taxi home, and the taxi driver takes the taxi fare and puts a gas in his taxi cab. Let's say your neighbor got laid off, is unemployed. Well, you may still have your job. That's good, but you're thinking, well, maybe I'm next. My neighbor got fired. The neighbor next door had his hours reduced by 50%. Somebody else got furloughed. I might be next, so I'm not going to spend the money. I'm going to put it in the bank and save it just in case. The economists call that precautionary savings. So here's the point. The Fed can print $5 trillion, and they are. And the Congress can run a $6 or $7 trillion deficit, and they are. But all of that money, upwards of $10, $11 trillion getting pumped into the economy, is not stimulative because it's going to the wrong places. It's filling in for lost production, but not creating new production. People are not spending it because they're afraid. So is there money printing? Yes. Is there deficit spending? Yes. But is there stimulus? No, because none of these programs I just described are having that stimulative effect.
Robert, you have been educating people on the Fed for a long time and the consequences of their action. Your recent book, Fake, stood out to me when you talk about the consequences of all of this money printing and so-called stimulus and how it will end in disaster. Do you have anything to add to Jim about what you think the consequences of all this money printing will be?
I see the total bill beyond 10 trillion. You know, that we have retirements coming up. Are we going to bail them out too? And then what about student loan debt, which is 1.6 trillion? And what about Social Security? And what about Medicare? And I know the Treasury and the Fed can keep printing money, but as Jim always says, there comes a time when the people will wise up. And I think really that's kind of the question, one, because everybody's right now happy to take that check. If you don't have a job, you're happy. You take the check. But I think eventually they'll wake up. They go, well, how much more of these checks can our government keep putting out? And I think that's my message. And the beauty of having Jim here is he came from the other side to see the workings of what I call the wizard. You know, who's the Federal Reserve Bank? I say it's the wizard. You know, you have Alice, what was it, Dorothy, and the Tin Man, and the Lion, and the Straw Man. You know, they go to see the wizard. Well, the wizard turns out to be this little guy behind the scenes pulling the strings. And it used to be Bernanke, then now it's Powell, they're pulling the strings. But just a huge illusion. And everybody's waiting for the Fed to save them or the Treasury to save them. And exactly as Jim says, who bails out the Fed? Well, the Treasury just did. Now, if that doesn't it doesn't make your spine tingle, you're not alive yet. You don't know what's going on.
Jim, I want to take it a little bit deeper if we can. You know, you just talked about the knockoff effects in the financial system and how bad they can get, right? But you've been warning about a far greater instability in our systems for years now in your best-selling books. So I want to, again, use some proof from the officials, because usually it's just you guys making the warnings, but when the officials start to get some religion and talk about these things too, you know, that's pretty strong proof. So here's a quote from the former chief economist of the IMF, Kenneth Rogoff. He believes the system's on the verge of collapse. He said, quote, "We're looking at a collapse in global trade unlike anything we've seen since the 1930s. An avalanche of government debt is sure to follow. An avalanche of government debt crises is sure to follow, The system just can't handle this many defaults and restructuring at the same time." A professor at Princeton University also expressed his concerns about the national debt, saying, "We are taking on a level of debt that would certainly be unprecedented in modern history or in history, period. We are definitely at a tipping point." And according to Kitco, the countdown for a full financial reset has already begun. So, Jim, you predicted this financial reset in your book, The Death of Money, on page 195. You wrote, and I quote, "The collapse of the dollar has begun. The Fed's insolvency is looming. As the dollar's 9/11 moment approaches, the system is blinking red." And it looks like you were right. So recently, CNBC reported that the global central banks are partnering up to explore digital currencies to replace the dollar. And even Ray Dalio, who's the former hedge fund, who's the founder of hedge fund giant Bridgewater Associates, now even agrees with you, Jim. He's predicting the beginning of the end of the dollar as the world's reserve currency, and with it, of the United States' economic dominance in the world. So he said, and I quote, "I believe that we are now seeing the archetypical big shift in relative wealth and power, and a profound shift in the world order that will affect all countries." So, Jim, the deeper warning really that you've been talking about in your books is the tipping point for the dollar itself. So do you think that the Fed's mass money printing or stimulus programs, or whatever language you want to use for what's going on right now, will that be the tipping point for the monetary reset that topples the dollar?
Well, we are heading for a monetary reset, Peter, and the Fed's money printing, again, as I mentioned, we're not talking about $1 trillion. We're talking about $5 trillion, which on top of $5 trillion, so going up to $10 trillion, yeah, it is heading in that direction. But I think it's important to think about, well, what does the reset actually look like, and what do we mean by that? A lot of people think, well, the dollar will be diminished as a global reserve currency, and we're all going to go to euros, or the dollar will decline as an attractive asset. We're all going to go to Chinese yuan. That's not going to happen. In other words, the dollar has lots of problems. I've spoken about them, and you just pointed them out. But all of the currencies are in the same boat. It's as if, the Titanic sank, and some people made it to a lifeboat, and they're in the lifeboat, and they have no food and no water, and it's freezing all around them, and it's the middle of the night. Now, you can go around the boat and say, well, this person's taller, this person's a little smarter, this person's a little more warmly dressed, but they're all in the same boat. They're all in this together. They're either going to be rescued together or they're all going to die together. And that's the way to think about currencies. And they're all in the same lifeboat. I don't care if it's Japanese yen, Swiss francs, euros, pound sterling, Chinese yuan, or US dollars. They're all in the same boat together. So we're seeing the collapse. The collapse is right there in front of our eyes. The reset is right there in front of our eyes.
Okay, so let's talk about solutions. Let's look at the 5 steps you both have put together for everyday Americans to prepare for this great American reset. I have them here with me on my computer, so let me put the first one on the screen. Step 1, buy what Goldman Sachs called the currency of last resort. The first step, right, is to buy the world's safest asset, gold, but not just any type of gold. We're going to go get the details right now, but first I can say that I'm not surprised you guys recommend gold. I mean, just look at what happened in 2008 when the Fed printed money to boost the economy, right? Gold exploded in the coming months and years. No wonder, right? Some of the richest investors in the world are buying gold right now. You have billionaire and hedge fund manager Paul Tudor Jones, who says gold will be the antidote for people with equity portfolios. Real estate titan and billionaire Sam Zell said that he bought gold for the first time in his life as a, quote, good hedge, unquote. And one Egyptian billionaire put half of his net worth in gold in mid-2018 to protect himself from a potential stock market crash. He stated, quote, people tend to go to gold during crises, and we are full of crises right now, close quote. But it's not just billionaires loading up on gold. According to the World Gold Council, central banks bought a historic amount of gold in the last year. It's really a gold rush right now, right? Everyone seems to be getting in. Jim, check out this headline. It reads, gold is heading for $3,000, Bank of America says. The Fed can't print gold. That's a quote from Bank of America, apparently. So how high do you think gold can go, and any specific type of gold that you recommend?
Yeah, I do have a $10,000 per ounce intermediate price target for gold, and I'll explain the math. People think I pull big numbers out of the air just to get attention. I don't need the attention, and that's not how I operate. I do have disciplined models, and $10,000 an ounce was the output of one of the models. The $10,000 an ounce price that's what gold would have to be if you wanted to go back to a gold standard and not cause massive deflation. And how do I arrive at that? Well, the global M1 money supply, when I say global, I'm thinking U.S., Europe, UK, Japan, China. They're the big economies, a few others. They have about $24 trillion in M1. How much gold do you need to back up that money? Well, it's debatable. Historically, 20% has worked fine. The Austrians would say 100%. Just take 40%. 40% is enough to inspire confidence, probably more than you need, but let's be conservative and say 40%. So 40% of $24 trillion money supply is $9.6 trillion of gold. How much official gold is there in the world? It's about 33,000 tons. I'm not talking about private gold. That's a bigger number. But official gold owned by governments, treasuries, finance ministries, central banks, and sovereign wealth funds is about 33,000 tons. So this is like sixth grade math. You take the $9.6 trillion target and divide it by 33,000 tons, and it comes out to about $10,000 an ounce.
Okay, so clearly, based on what you're saying, right, there is no time to waste. Gold is already on the move, as you can see in this chart here that I'll put up on the screen. And while stocks have crashed over the last year, gold is up almost 40%. Unfortunately, most people don't know the right way to invest in gold, and that's why we'd like to send you a copy of Jim's book to help you prepare. It's called The New Case for Gold, and inside you're going to discover why Jim only trusts a handful of online gold bullion dealers and why most American investors have no idea that these trusted, long-standing sources even exist. That's on page 152. You're also going to learn the super secret portable asset that's just as good as gold at storing value. Rich families have used it for centuries, and billionaires like Bill Gates and hedge fund giant Steve Cohen have used it as well. That's on page 169 of the book we'll send you. And you'll also learn the global threat to the dollar that could see gold prices soar even faster. And our government is complicit in what you're going to read about. And so find out what you can do to protect yourself and your family from that today on page 52 of that book that we'll send you. The number one gold buying mistake investors make. You'll learn about that, right? You should never, ever buy gold in the way you'll learn about on this page, or you'll put your finances and yourself at serious risk. And that's on page 165 of the book. And look, I could keep going and going and going through each of the pages because there is literary gold in each of those pages that will help you level up your financial situation and your financial education. Instead of me saying any more, let me just show you what a couple of reviewers on Amazon.com are saying about this book, The New Case for Gold. One reader says, awesome book that is a must read, worth more than its weight in gold. Another reader says, thank you, Mr. Rickers, for your financial life jacket. And yet another 5-star review says, the one book on gold you'll ever need for now. So, the New Case for Gold lists for around $16 on Amazon.com, but I don't want you to buy this on Amazon. I want to be the one who sends you this book, and I'll explain how you can claim it in just a moment. But first, I want to move on to the next steps. Before we do so, I have a question for you, Robert. Robert, gold is expensive to some people. So in those cases, you recommend they buy silver. Is that right?
I say silver is a good place to start. It weans you away from paper money. And so I've been doing silver since 1964, when the dimes and quarters and whatever that's half dollars were pure silver. And that's when Gresham's law kicked in. So, and the Romans did the same thing. It was called debasing their money. So they would get silver coins, and they'd either clip them or they'd mix a base metal in, like nickel or something. So when I was a kid, like 17 years old, I'm looking at my quarter, and it had this gold tinge around. Copper tinge around it. So that's actually when I started in silver, because I smelled a rat. I said, why would they be doing? I was a high school kid. I didn't understand it. So that's kind of how I got into it. And like I said in my book, Fake, that's when I was flying in Vietnam. And Nixon took the dollar off the gold standard. And again, I smelled a rat. You know what I mean? I said, what are they doing? And today, if you look at what's going on, the rat's very big. He's a stinky rat. I mean, they're printing trillions. Oh my God. And I think Jim probably knows what is the total liability of the Fed and the Treasury. Are they going to bail out pensions? Are they going to bail out Social Security, Medicare? Are they going to bail out everything? And this has happened throughout history. That's why I smell the rat. And I love silver. It's a good place to start. That's my only thing. $20, you're in the game. 20.
We already showed folks how gold exploded after the Fed money printing started in 2008, but silver went even higher. I mean, take a look at this. So we know both of you recommend physical gold and silver, but if those metals rise, you can make even more money investing in the right mining companies. So before we move on to the second step you should take, I want to tell you about Jim's number one silver stock to buy right now. You see, his team apparently just uncovered what might be the last pure silver mine in the world, a mine so rich that apparently if you walk on the surface, you might trip over pure silver. It's literally coming out of the ground. Better yet, it's owned by a tiny company that's trading for around $4, I'm told. So I have to admit that this is the most exciting story I've heard in the silver industry in several years because according to Jim's team, you could 10x your money if it plays out like their research shows it will. You see, this silver mine apparently is so big that a third-party analyst estimated its worth at over $7.4 billion. That's almost 10x the company's market cap. So, of course, I want to be clear, some mining companies can be volatile, especially the smaller ones. So, you should never, ever, ever bet the house on one single investment. But according to Jim's team's research and all the facts that they've shown me, this silver stock could easily explode, over 1,000% in under a year's time if some of their assumptions are correct. So just think about it. I mean, with this stock trading below $4, it just needs to go up another $4 for you to double your money. Already news of this world-class deposit is rocking the mining industry, I'm told. So Andres Moreno, who's a well-respected mining lawyer in La Paz, had this to say about the finding, quote, "The potential is among the best in the region, everything you can imagine and more," close quote. World-renowned mining analyst Joe Ragor admitted that this discovery is, quote, "too unique," close quote, to ignore. And that's why Jim's team put all the details in a special investment dossier called "The $4 Company Behind the Last Pure Silver Mine in the World." And I'll tell you how to claim this dossier and Jim's new Case for Gold book in just a moment. But first, I want to move on to the second step that Robert and Jim are going to share today. That's step number 2, protect your portfolio against a stock market crash. So, Robert, the USA Today recently published a letter from a retiree. I want to read it to you. So here's an excerpt. It says, "I had planned on retiring from my job this October after 42 years in the workforce. But with all this stock market crash and recession stuff, I'm not sure I can or should. I live alone, currently bringing home $4,100 a month, and I have $452,000 in my 401k, even after the crash. I haven't filed for Social Security yet, but I'll receive about $2,500 a month. I'll be 67 when I file. I don't have too many bills, and we only spend about $3,000 a month. I think I can make it work, but I'm just nervous about leaving the workforce with all the unknowns." So, Robert, the advice he got from the financial planner in that article was to continue to buy and hold in a diversified portfolio in his 401k. I mean, what do you think about that advice?
When I look into the future, as I said, 2008 is not 2020. So in 2020, I'm doing things different than I was in 2008. And what I'm looking for is the next evolution to prosper rather than get wiped out. But most people would rather just turn their money over to somebody else. And look, you've seen me go off the wire. And some yo-yo asked me, "I got $10,000. What should I do with it?" And I said, the first thing I would do is shut your mouth. You don't want to tell the world, "I got $10,000 and I'm a complete idiot. I don't know what to do with my money." Because if you don't know what to do with your money, they have plans for your money. And generally, it's put it in their pocket. So what Jim and I stand for is personal responsibility and education and making your own decisions. But I don't trust the stock market right now. I wouldn't bet my future on it. And simply because I don't think the crash has really hit you, the 2020 crash. And I don't know what's coming, but I think the crash is much bigger than the Great Depression.
Jim, you wrote recently about this, about portfolio insurance. So here's what you wrote. Quote, "You wouldn't be able to sleep at night without homeowners, auto, or health insurance, but nobody ever talks about how to protect your investment. But there's an investment in the derivatives market that can act as insurance for your portfolio." So my understanding is you call this investment crash contracts. Is that right? So as Investopedia explains, the best way to hedge against a potential market loss is to buy, what you're calling here crash contracts. So you've already showed a small group of readers how to use these contracts to profit during a crash, and they've apparently reported some incredible success this year. So I'm reading a note from Josh A. from Miami, and he said, "Tripled my account value. Keep them coming. It's nice to be in the green. I'm a believer." There was David Z. from Portland who said, "So far it's turned $270 into $3,895. I'm really pleased with the great gains." And Mary A. from Chicago says, "I made over 100% profit overall." So these are folks using these contracts to profit from falling stocks that you talk about, Jim. And these results sound great. Optimize Advisors President Michael Kay recommends using this strategy to protect your portfolio against further market mayhem. Of course, you don't need me to tell you that every investment strategy has some risk, right? But the great thing is these crash contracts, as Jim calls them, are designed to reduce your risk. I mean, they're just a great way to protect your hard-earned money if you use them properly, which is why Jim and his team want to show you exactly how you can use them. So Jim's put all the details in another special dossier called "My Number One Way to Profit from Falling Stocks, Even in a Great Depression." So in this special report, Jim and his team are going to show you step by step how to use the best strategy to insure your portfolio for the upcoming crisis. We'll tell you how to claim it in just a moment. But first, let's talk about the third step everyone should take today, according to you both. So step 3 is get rid of the 3 ticking time bombs in your portfolio. Jim, you've gone on record predicting a wave of bankruptcies. Is that right?
That's right. And this goes back to the point I said earlier, Peter, about, first of all, this crisis is not over, and it can take a year or sometimes longer to play out. We know we're in a bad place right now, We have enough information on that. But you can't just say, okay, this is the bottom. It all gets better from here. It can get a lot worse. And that's why it takes a while for these things to play out. So, for example, if an individual loses his job or her job and he or she files for bankruptcy, okay, what does that mean? Well, it means they don't pay the rent on their apartment and they break the lease. Well, what does that mean? It means the landlord can't pay his mortgage. Well, what does that mean? It means the bank has a bad debt. In other words, there are ripple effects. They don't happen overnight. It could take 60, 90 days for one bankruptcy to emerge and then another 90 days for another bankruptcy to emerge. But you play it out over a year. When a restaurant closes, it's not just the restaurant. They have suppliers, seafood markets, farmers, butchers, employees, delivery people, the utilities, the electric company, et cetera. So a restaurant going out of business isn't just 20 waiters and waitresses and maitre d's. It's all the supply chain where it ripples back. And by the way, if you're providing fish and one restaurant goes bankrupt, you might have 20 customers and half of them go bankrupt. So your business is down by half, and then you end up in bankruptcy. So the point is, it doesn't happen overnight. It can take months or a year or longer to play out. There are ripple effects, very bad ripple effects, because one person's financial distress ends up being someone else's financial distress because they were dependent on the first person. So on down the chain, it all ends up in the bank. So yes, we are confronting a wave of bankruptcies.
So for you watching at home, remember back in 2008, nobody thought that shares of popular companies like Lehman Brothers, Chrysler, or Washington Mutual could go to zero. And now analysts are starting to warn it could happen again this time. I just read this headline from Yahoo Finance that says, forget the Dow, coronavirus could send Ford stock to zero. So according to Jim, companies that don't have a ton of cash and that are deeply in debt and exposed to this crisis, they could go belly up. And that's why Jim has asked his team to find the most popular market sectors out there that could go to zero. These are ticking time bombs that are probably sitting inside millions of 401ks and IRA accounts, maybe even yours. So he's calling this dossier ticking time bombs, stocks to avoid during a market crash. And if you have any one of those market sectors in your portfolio, he's begging you to get rid of them before it's too late. So I'll tell you how to claim Jim's dossier in just a moment. But first, let's move on to step number 4. Robert and Jim, sometimes you guys are misunderstood, I feel like, and people think you are all about doom and gloom. But that's not true, right? Robert, in your case, I know you're always looking for opportunities, and you actually make more money during the crisis, right? You've frequently said that crises are the best time to make money. So can you talk a little bit about that?
Well, I really think it's what Buffett says the best. He says when the tide goes out, you find out who's swimming naked. Mm-hmm. And right now, you should be looking for naked swimmers. There's a lot of them, and there's more opportunity, but you have to develop and train yourself to see the opportunity right inside your face, in front of you. My best investment, actually my wife's best investment, is right across the street from our house. And it's going very well because it's real estate, but it's assisted living, high-end assisted living. The financing, the people are lining up to give us the money for that project, where people can't even get a loan. The same economy.
Okay, so this stock market crash could definitely create some opportunities, it sounds like. And that's why step number 4 on your list is 5 recession-proof stocks to buy. So Jim and Robert are not predicting the world will end. We'll survive this just like we survived the Great Depression of 1929. And that means if you know which stocks to buy at the bottom, you could make an absolute fortune on the rebound. For example, did you know there's actually a group of stocks that tend to go up during a recession? Companies like chocolate maker Hershey's, which climbed as much as 545% since the 2009 recession. Or toy maker Hasbro. Had you bought shares of that company in the midst of the last recession, you could have made up to 638% gains. Or auto parts retailer AutoZone, which in the midst of the last recession started a 1,061% run up. What do all of these companies have in common? They all had what's called high returns on invested capital. And for that reason, they not only survived the Great Recession, but they thrived. Well, Jim's team has just found the top 5 stocks with high return on invested capital. These are solid companies, in their opinion, that should thrive in this difficult environment. I'm sure you know all investing carries risk, and it's impossible to win 100% of the time, right? But fortunately, with Jim's 45 years in finance and all of his experience advising the U.S. intelligence community, he and his team of analysts went ahead and took the highest precautions for you. So they put all the details inside another dossier called 5 recession-proof stocks to buy right now. Again, I'm going to show you how to claim all this and this specific report in just a minute. But first, we still have one more step to cover, and this might be the most important of them all. So step number 5 is protect your family against a complete breakdown of society. Now, that sounds crazy, but Jim, I know you currently own a small lot of property in the mountains of New England where you have dug 3 wells, you've planted abundant gardens, you built a significant greenhouse. You also, if I understand properly, have installed the largest non-commercial solar power system in New England. So it's not a stretch to say you will not be dependent on anyone to take care of you or your family in an instance of social unrest. So how important do you think that is? I mean, most folks just think that the government can take care of them, but clearly you've taken steps that demonstrate you feel differently.
Yeah, look, ultimately, it's your responsibility to take care of yourself and your family. And of course, your family can help take care of you. So the idea of the family pulling together, even a small community pulling together and people helping each other out is key. But as far as relying on the government is concerned, we talked earlier about the first $2.2 trillion bailout program and maybe another $2 or $3 trillion along the way. Honestly, that covers about 2.5 months. That payroll protection plan was, I actually examined it. It was 2.5 months of payroll. That's how much of a loan you were entitled to if you even got that much, if they didn't run out of money before they gave it to you. So everything we're seeing, yes, it's in the multiple trillions of dollars, but the U.S. economy is $20 trillion, at least it was before this all started. It's running at more of a $16 trillion rate now, down 20%. But it'll start to grow slowly from there, but not fast enough to save everyone. So no, you should not depend on the government. And maybe not everyone can, have a farm or a solar powered system, but you can certainly think about, do I want to live in crowded cities where contagion spreads like wildfire? Do I want to live in California's a nice place, but it's been known to have a few earthquakes. I think you just need to use a little bit of common sense and not be in denial about natural disasters, pandemics, and other catastrophes that can happen. And don't be in denial about how much the government can help you, because when the problem gets big enough, the government can help.
Look, for you watching this at home, there is no way anyone can tell you how bad things will get as everything unfolds, right? It's a very real possibility that riots and mayhem will take over the streets like we've never seen before. And if you think that can't happen in America, let me remind you that in just the last decade, we've seen riots in Virginia, California, Chicago, Missouri, Nevada, among many others. I mean, I live in Baltimore, so the images of large crowds rioting and looting are still fresh in my mind. So, Robert, let me ask you this. The United Nations just warned everyone that this coronavirus could easily threaten global food supplies. And I'm thinking, if we get some kind of food shortage combined with massive unemployment, I mean, that sounds to me like a recipe for social unrest. Do you think it is?
Well, again, you can look at the numbers, the debt to GDP ratios, but what I'm focusing on right now is the human factor. Mm-hmm. If we have 30% unemployed, what's the pain there? Another thing that Jim was saying about being responsible, when I talk to most of my friends who are well off, they have family members who are not. Do you know what I mean? They have friends and family who have lost. Not that they've lost, they have nothing. So they're going to depend upon Social Security and almost nothing else. And they highly educated relatives, they have nothing. And so that's kind of why, like I said, I started writing Rich Dad, Poor Dad, because what does school teach us about money? Nothing. And so now we're going to see this price not only in social unrest, but families. Do you know what I mean? If my sister's a nun, I don't expect her to have anything. But, going to a hospital is expensive. And she doesn't have a house. She's taking a vow of poverty. Well, that means I got to take care of her. And how many people listening to this right now have those people around you that are kind of looking to you for salvation? So that's really the social unrest. It's called love of family and friends, and you want to take care of them.
Okay, well, that's why both of you on your teams have prepared a special dossier that will help you prepare for the worst. Whether you're concerned about a criminal break-in or a mob of angry protesters, you deserve to feel safe in your home. And I think if the coronavirus has taught us anything, it's that you should expect the unexpected, that you shouldn't think anything can't happen anymore. So, we reached out in our network to an old friend, an ex-CIA operative, Jason Hansen, and asked him for cutting-edge strategies that are designed to keep your family safe no matter the circumstance. So Jason's a man who served nearly a decade in the CIA, and he even won the CIA's Exceptional Performance Award, not once, but twice. And now he runs a 329-acre facility where he teaches evasive driving, pistol and rifle shooting, intelligence operations, and a lot more. So needless to say, he's the real deal. And he helped Jim and Robert put together a special dossier called How to Make Sure Your Home is Your Personal Fortress. And you'll discover a bunch of different things like the simple equipment that turns your front door into what Jason calls an impenetrable barrier. Or if you don't believe that you can afford your own panic room, Jason says think again. He'll show you how to build a panic room without spending a fortune. Jason also shows you the 6 steps to survive a crisis. So out of those 6 steps, Jason says you can't afford to skip step 3 if you want your survival plan to be a success. Also, do you think your house is already intruder proof? If your front door is equipped with one particular lock, Jason says, then your entire family's safety could be at risk. So he says you should read this one first. He'll also show you the simple item you must have, he says, in your house during this pandemic. It's not hand sanitizer, it's not a protective mask or anything else you might have heard before, but Jason says it could save your life. These days of lockdown, we're spending more time online, and so Jason also says you must avoid, what he calls the number one social media mistake if you value your safety and privacy. And there's much, much more he talks about. Really what I've just described is a fraction of the many potentially life-saving tips you'll find from Jason in how to make your home your personal fortress. You want to share this information with your loved ones and refer to the report on a regular basis during the crisis to ensure your family remains safe. So, how can you begin to make these moves that Robert and Jim are talking about right now? You see, the situation is developing really fast, and it's really not enough to give you all of the information and just wish you good luck, right? We could leave you with this video, but that wouldn't be enough. So, we all started talking, and we said, what if you could have Robert and Jim be your guide during these difficult times? And so we put together something amazing, an invitation to take a risk-free trial subscription to Jim Rickard's monthly newsletter called Strategic Intelligence. And when you take advantage of this invitation, we'll send you everything we've mentioned so far today for free. Jim's on a really simple mission in this monthly research, and that's to help everyday folks profit from unthinkable events and financial crises. So every month, you'll get a new issue from Jim, and that will be packed with ideas and strategies that will help you protect and grow your wealth. Jim will also keep you up to date and make sure you know exactly what's going on during the economic crisis. Before Jim launched this service, he had really only provided this kind of service to his high net worth clients and members of the U.S. intelligence community. But with Jim Rickard's Strategic Intelligence, you too will have the opportunity to hear his best ideas on an ongoing basis. We've received countless notes from everyday folks just like you, telling us how Jim has helped them protect and grow their finances. Here's just a small sample that I can read off. There was Jeffrey C., who wrote recently to say, "Thank you so much for all the investment analysis you have provided in Strategic Intelligence. I have found that your analysis of the economy and your investment advice stand head and shoulders above the rest." Patrick N. also contacted Jim to say, "I can sleep better at night knowing that when the stuff hits the fan, I will be making money and not one of those people scrambling to make it day to day." And Jim got a note recently from a reader named Ken F., who wrote, "There are only a couple of analysts I follow who really understand what's happening, and Jim Rickards is at the top of that list. He's the most intelligent and connected person I have access to. I look forward to each issue and find myself in awe of almost every word." There's also a nice note from Bill P. He said, "I have recommended Strategic Intelligence to my friends and family because it's information everyone should know about. It's worth its weight in gold." And here's the best part. You can take a look at Jim's research and receive everything we've mentioned so far today at no risk to yourself. So simply take a risk-free trial subscription to Strategic Intelligence, and aside from your 12 monthly issues, we'll immediately send you Jim's new book, The New Case for Gold, right? That's a $16 value, and it's yours free today. We'll send you Crisis Dossier number 1. That's the one that was titled The $4 Company Behind the Last Pure Silver Mine in the World. Crisis Dossier number 2. Jim's My Number 1 Way to Profit from Falling Stocks report, even in a Great Depression. Crisis Dossier number 3, Ticking Time Bombs, Stocks to Avoid During a Market Crash. Crisis Dossier number 4, 5 recession-proof stocks to buy right now. And the final Crisis Dossier, How to Make Your Home Your Personal Fortress. That's a total value of $261, but you can claim all that free when you take a risk-free trial today. So what does it take to get started right now? Subscription to Jim's newsletter normally has a published price of $99 for 12 months. So $99 for the entire year. But because of the unprecedented situation we have today with the crisis, I don't want price to be an issue. So you can take a risk-free trial for half of the normal annual rate. In other words, only $49 for the entire year. And we really don't want your money if you're not 100% happy. So when you take a 100% risk-free trial of Jim Rickards Strategic Intelligence, we'll give you 6 months to test out the service at no obligation to you. If during that trial period you find you're not getting life-changing information, or for any reason at all, you can simply call or email our customer service team and you can cancel your subscription. We'll give you a full refund, no questions asked, and we'll let you keep everything you received as a subscriber at no charge. You can keep all the issues, you can keep Jim's book and all the dossiers, you can keep everything, and that means there's no risk to you at all. You can literally check everything out, cancel the next day, and get all your money back and keep everything. Why would we do this? I guess it's our way of saying thank you for giving Strategic Intelligence a try, and just to make this a no-brainer for you. So when you take this risk-free trial, we'll also include a 1-year subscription to Robert's monthly newsletter, the Rich Dad Poor Dad letter, for free. So over the years, Robert has taken what he's learned from his rich dad, and he's built an amazing network of millionaires and billionaires, including Donald Trump. He's talked about business strategies with successful entrepreneurs and investors like Shark Tank hosts Kevin O'Leary and Damon John. And the Rich Dad Poor Dad letter is a culmination of everything that he has learned and everything that he teaches. And it's the only place Robert shares the secrets of the rich that the poor and middle class don't know on a monthly basis. So Robert's work has helped millions of people on their way to financial freedom. Take a look at what Jordan C. from Orlando said. What I love most about the Rich Dad Poor Dad letter is the complete help we get. I currently have a gain of over $7,000, and I'm going to use it to help supplement my retirement. Thank you. And here's another note from Danny T. in Baltimore. I have a duplex I purchased. If I implement one of Robert's ideas, I can walk away with $800,000 to $1 million in profit. Your advice has been most valuable. And one more from Mike K. out of Pittsburgh. I know we don't have all day here, so this can be the last one. The Rich Dad Poor Dad letter has helped me learn about making passive income and paying less on my taxes. So normally folks have to pay about $99 to get access to Robert's newsletter on an annual basis. But since we want you to be extra prepared for what you, Robert, and Jim are calling the Great American Reset, we're going to give you a full 1-year subscription to the Rich Dad Poor Dad letter, absolutely free when you take us up on everything we've offered here today. So you'll have 2 of the smartest minds in finance in your corner, guiding you throughout the crisis. To get started, simply click on the button below. It will take you to another page where you can review all the details of this offer. Okay, so if it's okay with you both, I want to end with the story of James Stockdale. So he was a man who survived 7 torturous years as a prisoner of war in North Vietnam. When asked who didn't make it out of the POW camp, Stockdale replied, and I quote, "Oh, that's easy. The optimists. They were the ones who said, we're going to be out by Christmas. And then Christmas would come and Christmas would go. And then they'd say, we're going to be out by Easter. And then Easter would come and Easter would go. And then Thanksgiving. And then it would be Christmas again. And they died of a broken heart. This is a very important lesson," he continued. "You must never confuse faith that will prevail in the end with the discipline to confront the most brutal facts of your current reality, whatever they might be." So here's how I see this broadcast. We gave you the facts today. I mean, now it's up to you to confront those facts. I'm sure you'll make the right decision for you and your family. So click below to take the next step. And Jim and Robert, I want to thank you so much for doing this. I think we all learned so much about what's truly happening right now. So thank you very much for attending and participating and giving us so much knowledge. And thank you for the folks at home for watching. Please, if you've been transformed at all by what Robert and Jim have warned you about today, click the button below and take the next step. Thanks so much.
Thank you.
Thanks, Peter.